Hey guys, Ben here and welcome to Motivation to Invest. The legendary investor Warren Buffett once stated if he had just a small sum of money and he wished to compound that at around 50% annually, he would do this by investing into small cap companies in his circle of competence. So basically that's what I've been doing. I've been researching these small cap stocks which nobody else is talking about. Even these guys on Wall Street, these large hedge funds, they're not even researching many of these stocks. And one of the reasons I know this is a hedge fund in New York actually reached out to me and asked me to do some contract work for them, basically researching these small cap stocks. But before I reveal my secrets to the smart money in these large financial institutions, I want to reveal them to you guys on this channel. Now, members of my VIP group do get access to all the stocks I'm researching very early, including my entire watch list and even live updates when I'm buying and selling stocks. So if that's something you're interested in, feel free to check out that first link in the description below. But if you're new around here, why not consider joining the investing community by hitting that subscribe button and turning that notification bell on. And if you appreciate value in this video, please give it an early thumbs up. That really helps out tremendously with the channel. With that being said, I'm going to be diving into 3 small cap tech stocks, some of those in the 5G industry. One of them I've actually already purchased. So if you're ready for that, let's dive in. Firstly, a little disclaimer on small cap companies. They are high risk, high reward investments. They're a lot more speculative than large established companies. For example, if you guys want me to just cover Apple stock and these big tech giants that everybody knows about, feel free, comment that below and I'll just cover those large companies. I do cover them as well. The small cap companies, they are higher risk. So basically, if I'm covering them on this channel, you guys need to be aware of that extra risk. Having said that, let's get into this company. Kicking things off at stock number 1 on my list is called Franklin Wireless. So Franklin Wireless, ticker symbol FKWL. Now, Franklin Wireless is a global leader in innovative hardware and software products that support machine-to-machine applications and the Internet of Things, as well as intelligent wireless solutions, including mobile hotspots, routers, and modems. So basically, this company will be a play on smart homes, smart cities, in addition to 5G. But diving into the press releases for this company, we can find out some really interesting information. So firstly, Franklin Wireless announces PinTrack Drive, a 4G LTE connected driving experience compatible with over 200 million vehicles. So that's really interesting there. Let's dive into that here. So basically, this allows smart tracking of vehicles on the road, and I can imagine a company like Tesla really wanting to use a software like this. The market cap of this company is only around $250 million. So a company like Tesla could easily acquire this company for the same price that people such as me and you would buy a snack from the shop. Franklin Wireless has also announced a collaboration with Qualcomm. So Qualcomm is a giant in the electronics industry and a major 5G player. So Franklin Wireless, a small cap company, partners with Partron, sounds a little bit like Patron, link in the description below, for 5G business and technology solutions to the worldwide market. So that's really interesting there. But what's more interesting is this 106% increase in full year revenue to $75 million. 106% increase on the revenue. So generally I say a growth stock is one which is growing at least 20% per year. 106%, that's incredibly fast, guys. Just be aware of that. And most stocks that people talk about, and even many which you will see with those type of growth rates, they would have ran up massively and have crazy valuations. But we'll get into the valuation in a minute, and you may be pleasantly surprised. What I also like to see here is the full year operating expenses for the company declined 5.1% to $7.4 million. So they're increasing their revenues, lowering their expenses. Full year R&D expenses increased by 27% compared to the last year. That's actually a good thing. I actually read a accounting report by McKinsey, a consultancy company, and they basically stated that companies which invest more in research and development tend to create more long-term value for shareholders. So that's actually a good thing. Here's a few words from the CEO. Our fiscal 2020 financial results reflect Franklin's ability to capitalize on the surge in demand for wireless connectivity brought on by the global health crisis. We were able to expand production to meet the unprecedented demand from school districts, large carriers, and other partners for advanced networking and connectivity technology as the country shifted to a work-from-home reality amidst the global pandemic. 5G, we continue to be well positioned to meet demand for 5G technology, Qualcomm partnership, and other networking solutions with a loyal and growing customer base that includes 2 Tier 1 US carriers. So really interesting stuff, a lot of tailwinds behind this company. Let's dive into the few of these numbers. We're on Stockopedia, so this is a stock research platform I tend to use a lot. If you wish to check it out, I've actually got an exclusive 25% off discount link. I'll leave that in the description below. Feel free to check it out, see if it fits your investing style. So we've got the stock here. It's currently got a stock rank of 97, so very highly rated. Momentum is picking up a lot on this stock. Value 75, so it's looking good value. Quality 87, so it's all looking pretty sweet. I mentioned the revenue growth earlier, so let's just dive straight into the valuation. PEG ratio. Now, PEG ratio is a price to earnings growth ratio. This is a metric that was popularized by the great Peter Lynch, who's one of the most legendary investors of all time. And generally, a PEG ratio, anything less than 1 is good. 0.4 on the PEG ratio. Enough said. Price to sales, 1.8. So you're only paying 1.8 times the company's sales, which is incredible. Now, you'll see a lot of people covering companies, covering stocks, and you'll be paying 20, 30 times the company's sales on 2024 revenues. This is 1.8 times the company's sales today. Now, small cap companies are where you can find this value. They do come with much more volatility though, so just be aware of that, guys. Their stocks can jump up by 400% within the past 6 months, which this one did, but then they can also plummet very fast. Also, current ratio, looking at the balance sheet, we're looking at a 1.67. That's not too bad, so generally I look for at least 1.5, 1.67 is okay. And here's what I love also, the company's also profitable, so it's just become profitable here. $17.6 million for 2021 expected and $20 million revenues forecasted to reach $200 million by 2022. So you can see how small this company still is. So only one analyst is covering this stock at the moment. It's probably me, but there seems to be one person here. It doesn't say who they are. It must be me. It says one person, they say it's a buy, so that's interesting there. So great company, small cap, high risk, high reward stock, as we know with small caps. But I do like this stock, 5G play, very interesting. The stock did run up massively if we go back to November. So it ran up massively. However, we've had a bit of a correction now, quite a large correction down. I've put the Fibonacci retracement on here, which is a technical indicator. It's below the moving average, which is this blue line here, so the stock isn't overextended. Potential buy point here, I've put here $20 buy point, so that's buy point 1. There's a strong support here, as we can see over the past few parts here. Buy point 2, I've put $18, so it's currently at $20 as I'm recording this video. Like I say, VIP members will get early access to exactly when I'm buying and selling stocks. I do currently own this stock at the moment. Right, so that's a really interesting one. Now let's get onto stock number 2, and that is WyPoint, ticker symbol WY. Why? So WyPoint Corporation is an IT company with products and services and solutions for commercial companies and federal and state governments. Now that's really interesting development, and I'll get into that in a little bit. So this is what I like about WyPoint straight off the bat: stable, predictable, and growing. So compound annual growth rate, 33% since 2017. Stable company, 13 consecutive quarters of positive EBITDA growth, 92% customer retention. So customers who sign up for their services, they stay with the company. And it makes complete sense. If you're hiring a company for your IT services, you're very unlikely to switch companies even if they increase the prices. Full year 2019, positive net income with trend continuing. $23 billion total addressable market. The company was established back in 1997 and revamped in 2017. That's what I like to see, an established company with strong roots, but they've revamped themselves in 2017. They've got a new mindset now, and hopefully we'll see a lot of growth in the future. So what does this company do? We manage your devices, we keep them secure, we analyze and show you how they're used. So this is my favorite part: long-term expanding contracts, government contracts. We all love government contracts because they have a 5-year average contract length, long-term contracts. These are the #1 trusted provider by the federal government, according to these guys. 92% customer retention, over $11 million in contract awards, extensions, and renewals. So they're working currently with the Department of Homeland and Security. So they've saved the Department of Homeland and Security $265 million since 2012, potential to add up to $500 million in revenue. So that's on the cards for this company. Now, let's look at the market cap real quick. Market cap for this company is only $73 million, and they have a potential pipeline here of $500 million in revenue. So there you go, you do the maths. Trusted by 100 plus global enterprises. So commercial, 3-year average contracts. We've got Southwest here. We've got Microsoft. We've got BT, British Telecom. We've got Cisco. We've got Free. We've got many, many other players in here. Public, 5-year average contracts. So we've got all these various organizations here. I'm sure you guys know some of these. US Customs and Border Protection, NASA. Okay, diving into the valuation. We're here on Stockopedia right now. Let's get into that valuation. So the valuation for this company, PEG ratio, I say less than 1's pretty good. This is it, a 1, so that 1's still not too bad. Price to sales, this is just brilliant. Price to sales, 0.55. So you're paying basically 60 cents for every dollar of sales this company makes, and the company's growing. Current ratio on the balance sheet, 1.15. Sales growth over the previous year, you're looking at 94%, incredibly high growth. Yeah, it seems like a no-brainer, really. All right, so the last company I'm going to get into, stock number 3. This is a really interesting company also. This one is called Vernatex, ticker VHC. This is an internet security and software company, but really this company is basically, some call them a patent troll. So they basically have over 70 patents and patent applications, and this is the foundation of their business model. Now, I'll show you what's interesting with this company. So they've got around 70 patents at the moment in the tech space. But what they tend to do is they've got all these patents. They don't really use them in the nicest possible way. But when they see other companies trying to use their patents, Apple, Cisco, they just sue these companies. And they've done that recently. They've sued Apple and actually had a major payoff. This is some information I discovered. This information, you won't really see this information on CNBC or anywhere else. It's because it's these small cap companies. No one tends to cover them. Okay, so here we go. So looking at the recent news. So Vernatex receives $500 million plus interest, costs, and ongoing royalties in final judgment in Apple suit. So they sued Apple many years ago, and it's finally sort of gone through now. Apple appealed to the Supreme Court, and that was then rejected. So that's actually a good thing for this company. Generally, it's they get sued by these courts in Texas, and they tend to be very on the side of the small company and very against the large, big tech giants. So basically, these guys will get a royalty at 84 cents per infringing iPhone, iPad, and Mac product. So that's a lot of royalties. So when this company isn't suing other companies, it tends to partner with many companies and licenses their technology to them. Microsoft, so they've signed partnerships with Microsoft, Mittal Networks, NEC Corporation, Siemens, and many more. So basically what these companies do, they'll pay this company a one-time payment for their patent, or they'll pay them an ongoing royalty. Now, Apple's been forced to pay this company an ongoing royalty as they infringe their patent as deemed by the Texas court.
Ready! I got a big Texas belt buckle! Yee-haw!
But the company has just 20 employees, mostly doctors and researchers, and basically they seem to just do a lot of research, file these patents, and then either license them to these other technology providers or sue other companies who try to license their technology. So the company has just a $400 million market cap and was founded in 2005. The chairman, Kendall Larson, owns 9% of the company. That's great to see. Insider ownership shows that they have skin in the game. If the company goes down, they go down with the company. Price to sales, 1.34. So you're only paying 1.34 times the company's sales, which is great. Now the sales growth, it says it's 550%, but I believe that's a skewed number as they received $454 million from Apple, but the company's market cap is $297 million. They've received $454 million from Apple. So you're basically just buying the cash dollar for a dollar that this company has. And you're getting all that expertise and all those patents for free. So the current ratio for this company is an 8.94 because they have so much cash right now. The only negative I would say of this company is looking at previous years when they aren't receiving these major payouts from companies like Apple, their revenue is extremely low. So their revenue is not consistent. Generally, I like to look for companies consistently and in a scalable manner. This company basically had very low revenues, and then boom, big payout from Apple. And then that's basically what this company seems to be betting on. So still very interesting company. Basically the competitive advantage of this company is all those patents that this company has. That's basically a competitive advantage because no one else can use their technology in the West anyway. In China, they just tend to do whatever they want. But there you go. If you guys found some value in this video, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, go ahead, hit that subscribe button, join the investing family and turn that notification bell on. If you wish to not miss out on early updates and early stocks when I'm buying stocks, when I'm selling stocks, and access my entire investment portfolio, go ahead and hit that first link in the description below to be taken to the Patreon page where you can find out more about the VIP membership group. There you can gain access to all my buy and sell signals. So if that's something you're interested in, first link in the description below. With that being said, I hope you guys have a tremendous day and I'll see you in my next video. Invest safe.